Hey guys, and welcome back to another video here on the channel. My name is Brandon, and happy Sunday to everybody. I hope everybody's staying safe. We got a fun, lighthearted video today. It's going to be a bit of a two-pronged video, actually. We're going to be doing our stock market update a little bit early. So as you're watching this, these numbers are going to be as of April 25th, I believe it is. April 25th, so this weekend end numbers. And we are going to be doing a bit of a Q&A, just a personal one here. I want to thank everybody for the questions they left on the Q&A for me and my dad. We had scheduled that one for a while, and just with everything that's been going on, we have decided to push it off just to be extra safe. I know we're probably being a little more cautious than we need to, but my dad and I do live apart, and just getting together, we've just pushed it off slightly. So I want to thank everybody for the questions, and we are going to still be doing them. He's had a look over them. We're really excited to do our Q&A. But just for now, I'm going to be going through and just answering some of the scraggler ones that are more, the good ones I'm going to save for him. But the one-off ones that I believe I can answer, I will be answering in the second half of this video just to give a little bit of input there. But we will start things off with our stock market update. And fortunately, I mean, we don't have too much exciting stuff to talk about here, guys. Looking at the top of the leaderboards, this is as of April 25th, year-end numbers. This includes the little bounce up that we've seen in the market. We see the little kickback that we've had over the past, week or so, a couple weeks. In the top of the leaderboards, we have Brian, Josh, Tesla Ken, Nareem, and Carlos as the top 5. You can actually take a screenshot here as we scroll down. One thing that I will note, as the market has picked back up, we are seeing these account values start to creep up above that 100,000. If you recall from last month, we had majority of the portfolios down below our initial starting balance. But here we're seeing up to looking like this is about 81. So the top 81 portfolios have officially kicked back up into positive territory, looking at a year-to-date number, which is, it just goes to show this rally. Believe it or not, guys, this is technically, we've came into a bull market because we're up 20% off these highs. I will just scroll down so you can pause and see where you are. Again, unfortunately, there's not too much exciting news here. I was hoping for a lot of ups and downs and movements. You will note again, yep, I did happen to slip lower, which is just borderline embarrassing what's going on with this challenge to be second last year. We still have David in dead last, and we did review his portfolio, the 5 selections at least last time. So I don't think we need to get into that again. This is just a very quick update, basically trying to tell everybody here that not too much has changed. We've had a ton of volatility in the market, but it almost seems as though the market as a whole is moving up, and a lot of our portfolios are all moving up in a similar scale. We didn't have any movement in the top 5. I know in the bottom here, pretty similar story with me, of course, dropping down, which is just a big bummer. We can dive into my portfolio in another video if anyone's curious about that, but not too great there. Let's move on to the second component of our video. And again, we're just kind of clumping in 2 videos here just to throw something out on this Sunday. I hope everybody's staying safe, and maybe you're just looking for some content on the weekend. I will definitely be saving questions like this for when we do the Q&A with my dad. So take an awesome question from Michael here. What are some tips and advice for teaching your children to be financially responsible? What can I do at a young age to help instill their fundamentals, etc., etc.? These are questions that I'm not going to be able to give the best input in. I went through this list and found a bunch that I feel I can answer. Ones that don't necessarily are looking for my dad's opinion, but ones that I can just chime in and give a little input on. So let's dive into those ones today. Muhammad Ali asks, what are your thoughts on day trading or swing trading and just playing the short-term volatility? Thanks. And this is a question, Muhammad, I know you've asked a couple times, and I haven't got to it yet because we've actually done an entire video on the channel on my thoughts on day trading and swing trading. I'll go as far as linking that one down below for you guys, or you can very easily just go to our channel and search it up. That's actually quite an easy thing to do, is just type in day trading there. It'll be one of the first ones to pop up. Go watch that. But my opinion on it is it's just, for many cases, not worth the risk. It's just not worth the time, the hassle, and the potential downside that comes with it. For me, that is. The way I view investing, the way I view the stock market, I should say, is you have investing on one end of the spectrum, the Warren Buffett long-term buy and hold approach, and then you have trading, day trading, swing trading, all sorts of plays where you're trying to get in and out of the market versus the long-term investing approach. To me, when I look at that spectrum, I just figure, why would I even bother over here where I actually face the chance of losing money, right? I always like to say, if I'm investing in a top tier quality business like a Johnson & Johnson or a McDonald's or an Apple, for example, yeah, you get the temporary ups and downs, but for a young investor or anybody with a longer time horizon, 10, 15, 20 years, yes, you got the temporary ups and downs, but I like to say it's very, very certain that you're going to go on to make some good money. Whereas when you go for the trading route and you try to play the short-term volatility, one bad trade, one bad day in the market, one mistake, and you can actually kiss your capital goodbye, right? One wrong trade and your 10 grand, your 100 grand, whatever you're dealing with in the market, you could see that evaporate and you will never get that back. So for me, it's just, there's a proven route and then there's the unproven route. And I know this is so exciting and it does draw a lot of attention, but for me, I've just never had the interest in it because I feel, why would I even bother when there's such a cool route over here? Such a, not cool route, but such a proven route in investing. It's boring, but it works. Can it be done? Like, can you invest, can you day trade? Can you swing trade and make money in a market like this? Absolutely. You sure can. In fact, volatile times are often some of the best times to be jumping in and jumping out because you can see major swings. That said, it's just not the game for me. I would love to hear my dad's opinion on this when we do our Q&A. So we will store this question, and when we do get together eventually, we'll go ahead and ask him this because I'd love to hear his opinion on that as well. Donald J. Trump asks, if someone in their 20s makes 110K a year, what percentage of their money do both of you think is an appropriate amount to be investing? And again, we'll save this one for my dad as well. But in my opinion on that, in your 20s, I think, well, the golden rule that I like to follow is 15%. 15% of your gross income. That is what I was always taught by the book. If you're going to read the textbook and they're saying, hey, what's the golden number to aim for? 15% of your gross income. So take what you make per year, not after tax, but pre-tax. Take 15% of that. And if you can split that up, per paycheck or per month, that is what you should be aiming for, in my opinion, at a bare minimum. Now, for a 20-year-old, especially knowing our generation, the millennial generation, where so many of them are living at home, so many of them have expenses that are quite low, maybe other than student loans, if that is something you have kind of on you, a student loan, I think you can be aiming for much more than 15%. I personally truly believe that. I think while you're young, that is the time to start banking up. Especially if you're living at home, you have no excuse to not be doing 30% of your income. Heck, a lot of my friends could be doing half of their income, 50% plus. When you do live on your own, yeah, it becomes tougher with rent, especially somewhere here like Vancouver or Toronto, where it does get quite costly. But I would say if you're making 100K per year, what amount should you be investing? Take 15% of that as a minimum, but I'd say go as high as you comfortably can without overstretching yourself. Pay yourself first, and it could be as simple as that. Sergio Benitez asks, what are 3 companies that could potentially 2x to 5x in the next 10 years? Good question. I'd probably lean towards some of the smaller tech companies at the moment. That would be my guess. In fact, if markets pick up, 10 years from now, let's hope a lot of companies have 2x'd, right? Off these lows. Not out of the question, right? For some of these really, really strong, even blue chip companies. Crazy to believe, but I think that's very possible. But I would definitely lean towards some tech companies. One that comes to mind recently, let's just take a gamble on it. Peloton, fun stock that recently came to the market. I've been using their service here at home, doing some home workouts, doing some of the boot camps and whatnot, and I'm really impressed with their product. One thing I always find is when I'm impressed with the product, I look into the company more. I don't want to be biased about it, but that's one that I will look into more. I'm not going to buy that personally, but it could have the potential to 2x. Maybe take a company like maybe Uber. Those are the types of companies that come to mind. Kinaxis, I believe it is. KXS is a stock that Emmanuel, if you're watching this, one of our students brought up to me. Very cool company that I'm actually planning on including in a video. I think that is one that could be one to look into. You guys know I am not one to select stocks like that, speculative stocks like this. The smaller cap ones, honestly, I'd rather lean towards a big blue chip, like a company like Tencent, even an Apple, which would be tough to double because it's already so large, but I wouldn't count it out. That's the route I would take rather than going with the speculative ones. I've recently started investing in the stock market with $1,000 with 4 ETFs and 2 stocks, dividend growth investing. Is this too small to start? How can I grow my portfolio? I don't think it's ever too small to start. I think the fact that you've got $1,000 in the market is a great base to start off. Is it too small in the sense, will it be providing for your future? If you don't ever add any money to that, I'd say absolutely not. That is not going to multiply many times over to the point where you can retire off of that amount. But is it a great start? I think that's a fantastic start. $1,000. If you can commit to $1,000, $500, $10,000, it's all relative to people. But investing is about getting that snowball rolling. It's about just pushing that little ball off the edge of the ledge and just letting it pick up steam. The way it picks up steam is you add money in, right? Every month. If you're someone that's still working, obviously you got to be safe at a time like now, but commit as always as much as you can. The monthly contributions, the bi-weekly contributions, those little incremental additions make the world of a difference. And that's how you grow your portfolio, but you got to start somewhere. I think, sure, $1,000 is a great place to start. Is it safe to buy weed stocks for trading? You guys know my opinion on that. Is it safe? Probably not. Not a big fan of the weed sector, not a big fan of trading to begin with. How or if to invest as a new university grad with student debt? This is a good question from CLB, CL space B. One of the things that I always try to promote when it comes to investing is that you clear off your debts before you do it, okay? And what I like to say about that is you clear off your, it's okay to hold certain debts, right? There's manageable debts. Take, for example, a mortgage, right? It's unrealistic to think you're gonna have to pay off your mortgage before you start investing. Mortgage is okay. In many cases, if you have a car loan, I would consider that kind of just part of your daily life. I would almost consider student loans closer to this end of the spectrum rather than like a credit card debt. A credit card, very, very high interest credit card balance, or some sort of high, payday loan that you have outstanding where you're getting charged an insane amount of interest. Those ones need to be paid down before you start investing. But the student loan, depending on how much interest you're paying, and that would obviously vary depending on your terms and what type of student loan program you got running. I would almost say, hey, allocate some to the student loan, some to investing. Keep in mind, we are in we are in a low interest rate environment, which is a benefit for carrying certain debts. So it's not the end of the world if you look at your income that's coming in to allocate some to your student loan and some to investing. That's one approach I would do. If it's a very high interest rate, I'd say, hey, just focus on paying that down and then go into investing. It totally depends on the terms of your student loan, but I definitely think both can be done because that could fall into a manageable debt, I would say. We got a final question in here from Jared, which is, I think, a really good one to end this video off with. What are your views on ethics in investing? Do you avoid companies that abuse animals or workers? How do you feel when you see bad headlines about the companies that you've invested in? And I think this is just a phenomenal question here. Clearly, I would never want to knowingly support a company that is abusing animals or abusing workers. That's a given. That said, and I don't want to sound like a savage here, I don't want to sound like a bad guy, but I believe that a lot of companies, even our favorite big blue chips, they do a lot of dirty stuff under the table. I think when it comes to these billion-dollar industries and making all sorts of money, I'd love to believe that all companies follow the rules and everyone is working in an ethical manner, but if you had to ask my real opinion on that, I bet you that's just not the case. You take the scandals that come up from time to time, like Volkswagen with the emission scandal. What's another one that comes up? Wells Fargo of a recent one, kind of churning bank accounts or setting up fake accounts. These are some of our big companies that are traditional, that are loved, that you support. The same thing could be happening with companies in my portfolio. And there's really no way of me knowing about that, right? You can do your research, you can do your due diligence, but half the time, the world doesn't even know about this type of thing. So do I think unethical stuff happens? Yes, I do. Would I knowingly support that? No, I wouldn't knowingly support a company that's being unethical. But if you were going to tell me, hey, I want to invest in the sin stocks, right? So tobacco companies, alcohol companies, right? Budweiser, Molson Coors, even casinos, some people would kind of categorize that in. Some people have a negative view on that. Some people have a positive view. Oil companies, one to think about. I know that's a big one with fossil fuels, green. I don't really go either way as an investor. I can just kind of I try to just kind of look at it from a level-headed approach and just say, hey, if there's a good investment opportunity, I'm personally okay with that. But if you are going to tell me, hey, I want to avoid oil companies for whatever reason, I have no issue with that. There's so many different companies out there to invest in. And if you have a stance or a belief on it, stick by it. And I wouldn't judge you on that. I wouldn't expect you to judge me on my investment choices. I just feel like everything's a lot more intertwined than you'd think. It's funny. Someone will say, hey, I'm not going to invest in an oil company because they're terrible for the economy, terrible for the planet, I should say, terrible for the environment, the planet. Yet they'll invest in some other companies which probably under the table are doing something just as bad. Maybe not just as bad, but I think you get the gist of what I'm saying. Really, really good question there. And I think I will end it off with that. I hope that answered your question, Jared. I love questions like that. That's a really unique one. And I'd like to hear your opinions on that too, guys. If you have made it this far and you have anything to share, any thoughts on the questions I've answered, if you have a question that you'd like me to answer for another video, you can leave that down below. Like I said, I'll be doing a video with my dad as soon as things, I don't want to say clear up. I mean, we don't want to wait however long this could take to do our next video. We're going to try to get things sorted out, but we are just being extra cautious. We're just trying to do our part in this social distancing thing. Like I said, we live apart from each other. And if it's unnecessary and it could just, I mean, how crappy would it be if somehow we contracted it? It's just not worth it, the risk. I know you guys probably want to see that video, and I do want to thank you all again for all the comments. I've saved the good ones if I didn't answer it here, because we are going to get to them. I promise you that. If you guys enjoyed the video, give this one a thumbs up. If you enjoyed the update, I appreciate you guys tuning in, and I hope everybody is having a okay Sunday here, an okay weekend. But that'll be it for me. Thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.